Hi guys, hope you're all well. Welcome back to the channel. It's Saturday afternoon, so I'm going to take this opportunity to discuss the couple of trades that I placed this week and why I identified a potential divergence, why I thought the trend could reverse. So before we go into them specific trades, we're going to look on the daily. I thought it was on the 4 hours there. We're going to look on the daily and identify why I expected or why I was short bias through the last 2 weeks or 2 weeks ago when I was in Dubai. The only problem with the Hakkasan trade, and that's what I'm going to call it, I expected to hold that. I really wanted a big move, as I did on the 2 swing trades going out to Dubai. But I didn't. I went in slightly larger than I wanted to, and I was enjoying myself. So I didn't want to be checking my phone. I know we can add trailing stops, etc. But it's very hard when you're trading with real money and traveling the world. I want to enjoy my time away and away from the charts. I do enough work behind the charts and with my mentorship and my other business adventures that when I'm on holiday, I simply like to relax. So as you can see on the charts here, technically speaking, we could see that this was the end of last year, 2022, and we could see here a nice sort of triple top, if you like. So we bolted out of the gates in 2023. So we had that 5% pump and dump, followed by another long push, only to reject here. And this is why I was short biased. We could see that the short squeeze was very much in our face and it was very apparent what was going on. So I do like to trade these trend lines. So there's no secret here that, we've got a trend line, a supporting trend line. Is it coincidence that it's been tested here from here? So we've got a nice double bottom there, slightly increasing in price. Look, we've tested it here again, and this is why it's important to trade with the trend and not try and overcomplicate things. I see loads of people, okay, we've got to pick a right entry, but why not just do it with the trend? And that's my opinion. I like to keep things as basic as possible because it can get a little complex and you do struggle with your emotions. You do struggle with maybe taking 1 or 2 entries that has faked you out only for you then not to proceed with your strategy. And you've ruined yourself, you've ruined that opportunity, or you've missed that opportunity. So by recognizing that this trend line works, supporting trend line, resisting trend line, I'm confident that this short squeeze was going to break out or down. And that's what I was mentioning on social media, very open and honest with my trades. And this is why I placed the short trade. Okay, so the reversal, similar sort of theory. On the flip side, we're giving away X amount of gains. So if we do a measuring tool on here, we can see that from the bottom here to here, 6%. Okay, so when we're getting in and around this support level here, I'm fairly confident that we could potentially hold. Should we not hold, and I've put an entry in, and I'm wrong. I simply cut the trade. I'm not wanting to possibly hedge down here, which I did a lot of in 2021 and 2022. I did my students. But I would have taken the loss here. I've grown my account in such a way that it can handle these losses. My position sizing is pretty bang on. I'm comfortable with my profits and losses. I only ever have 3 alternatives: a small win, a small loss, or a big win. There's never a big loss on the table. And if it does get a little bit lumpy and I ended up taking it on the chin, so be it. It's not in a stage where it's going to wipe my account out and I cannot no longer trade. So position sizing is one thing, but the overall macro economy and the fundamentals was leading me to believe that we potentially might have a bit of a reversal here, divergence, as I say. So onto the entries and the identification through the confirmation that the rally was potentially going to alter, or it's found a support level. So we know we've had this 6% drop here. So now I'm looking for multiple rejections from support, which we've got here. Okay. Not only that, I believe there was some demand area in and around there as well. So from previous levels here, we've got a bit of a demand area. So yeah, okay, that's at end of last year, but sometimes it's worth just scrolling back to see if we're going to break these levels, and if we are, we can still go back to our trend line. But the 6% sell-off was enough for me to consider that a reversal, a divergence, could be on the cards. So we had the Wednesday trade where I was in at 750. So this trend line was ever so slightly down here. I've moved it for the more recent developments. So is this a coincidence that the American Open on Thursday has hit this trend line? Possibly so. However, we know we've got multiple rejections here. The trend lines work. Trading with the trend, okay? Yes, I'm kind of contradicting myself in terms of the reversal, but that's when we know that divergences happen and a change in trend could be likely. So we've got the European and the American Open here. This is a good indication to give us an insight that trend is failing to reach support here. So for whatever reason, we're having buyers stepping into the market and the potential orders here, or there's buying interest where come the American Open, we've tested this resistance here again. So this resistance now is acting as support. So that's my first indication that I'm wanting to go in long, okay? Didn't really do much in the way of Thursday, but this is where I got in, 163. Soon as we were breaking here and testing the levels of resistance, I wanted this to break, then act as support for a push long. Should we have held here where, look, you can see where we've been testing this trend line time and time again. Is this coincidence? Again, we know by the last hour when we zoomed out there that the trend lines work. So now we're waiting for it to break and retest that to really get some buying pressure in. So the heat map, I was actually looking at the stocks and the heat map, and it looked quite positive. There was no real indication to sell off further. Yes, we have got the fears of the recession, but we don't know when that's going to take hold or how long. It might be a mild, long recession for 2, 3, 5 years in terms of the fundamentals. Is the worst already priced in? So we could potentially have seen the bottom or the recent lows of that 6% sell-off, and we've seen that the buyers have stepped in now. So we're using all these levels of confirmation and all these levels of interest to see where we can get in. And I got in quite late to the party, and for very good reason, because once we was, again, look, resisting. So we're almost got a resisting price here, which is an R1. So now we're wanting that resistance to act as supply, to act as demand, or to act as a supporting price now, where we can now get in. So these little pullbacks were getting bought, pullbacks were getting bought, pullbacks were getting bought. So we're almost getting an upward trend, and that's where I stayed in the trade. Yes, hypothetically speaking, if I had that much confidence in, I could have gone in and started adding to that position, dollar cost averaging in, but I didn't. I was happy to relax on a Friday tea time, and I ran it all the way up to 9 o'clock. I actually closed it here, and I actually went short and got another £500. So nice little trade, nice little overview of trend lines, and when the resisting trend line is broken, that we're potentially acting as a support, and not overcomplicating things or understanding market structures. Listen, there's 1,000,001 strategies that work out there, but I think trend lines for me give me confidence that I'm reading the market in terms of technicals. Of course, if the fundamentals, if World War III kicks off, this is out of the window. But roughly speaking, trend lines are my go-to favourite. And on about trend lines is that's what you got to be doing. You got to be trading with the trend or pick up on a trend. Yes, we can scalp these various resistance levels and supporting levels and get in for 3, 5, however many hundreds of pounds, but these larger moves, you need to be getting 1 or 2 of them under your belt regular throughout the month, because I've done it myself. I've had 5 scalps on the bounce, 10-15 points here and there, and then I've let one go offside, and then before I know it, I've had a 50-60 point move where I've not stuck to my risk management, and it's wiped me out. I've had a whole week or a whole day's worth of gains wiped out. So it's not just all about scalping 10-15 points, or you need to be getting, I mean, certainly on these larger squeezes and these speculative larger moves, you need to be capitalizing on them, because do you think that banks, okay, they have got algorithms and, you know, trading million times a day from potentially but us as retail traders, we haven't got that. So you need to be focused on these 2% moves that happen across the Nasdaq or stocks, because if you're not capitalizing on them, you're doing yourself a misjustice believing that you can outsmart Wall Street every single time. Yes, you may be able to do that 5-10 days of the month, but you're going to have a little bad run. It happens where you're not reading price action, or price action's faking you out, and that's when you have to have bulletproof risk management. And I use analogies through business and gyms and etc. And what I will always say is, in business, you got to learn from your mistakes. So if I buy 5 cars and one of them isn't right, I actually bought a Mercedes the other day. It was a nice A class. It was only 10 grand worth of car, but I could earn a little wage trading it on. My pal said, "Oh, I'll buy it off you." So I traded it on at 400 quid. If I'd retailed that, I might have got 1,500 quid plus a warranty, etc. Then you've got tax to come off that. So it's just recognising and adjusting. And I thought, well, you know, a quick drink opposed to waiting 2 or 3 weeks that I might sell it, I might not sell it. So, and this is what you got to do with business. Recognise when you've gone wrong. This is a business, trading. I don't take my profits. You see people taking them every other day. Why would you do that? Because you may have 2 or 3 days where you needed that money, or you needed that little cushion, and it's peace of mind. If you can run it 20 days, or obviously there's 30 days, but 20 trading days in the month, and you're using it as a business, and again, it's a bit like the gym, showing up and putting in the work. We all know what we need to be doing. So if you've gone wrong, get your risk management in place and take the loss. And these trend lines, for me, like I said, they're my bread and butter, my EMAs, my VWAP. This is what I'm sticking to, because I'm trying to gauge where sentiment, where the market structure is. Yes, we love our fair value gaps, and we love this and we love that, but stick to the basics and do that well for however many months. And once you've exhausted that and you're seeing other opportunities within the market, within these supply and demand or support and resistance levels, then you can start overcomplicating it. But for me, the VWAP, the 50, the 100 EMAs is my go-to. It's my bread and butter. It's how I understand the market. Other people can understand that naked charts, and I did that for a good while, especially scalping. I mean, this level here, this was massively of interest to me. So such a round number where I would have liked to have gone in, but and tested this trend line, but I was waiting. This is what I was waiting for here. I wanted to break that resistance level. I wanted that to hold for a further push up, and that's what we got. So I got the second half of the move. So once if the selling pressure was to be prolonged and really take hold on the market open, this is what I would have expected to have tank here. As soon as we held this level here, which was a round number, and I've actually got a supporting trend line there. Once we started to show levels of strength, buying pressure, I was confident. I've never been so much confident in my life with a trade, and this is what you get when you've multiple confluences, when you're adding your trend lines into, you're seeing that diversion, and over time, when you can read price action like I can, then it will come. It has to come. You know, when we're seeing this reach a resistance level there, this is acting as support. So yes, we could have shorted this here, but we haven't. We've held it. Another good example. It's a lot easier to look back. So when I was in here, you know, naturally I'm seeing a higher high, and I'm seeing that this isn't breaking this recent levels, and this is where I'd have alerts set in my phone. I don't have a trailing stop loss. I'd just give it 10-15 minutes, lock in profit, lock in profit, lock in profit. But trailing stop losses are great because trailing stop losses are great because it's literally trailing your loss, or locking in profit further and further up. But when you're in that position where you don't need to manage it and you're positioned because you're financially well off, where you don't you see, I need to look at the trade because I'm emotionally invested into not only my own money but my work. I like to look at my profits going up, and if I don't like what I see or it's hitting an EMA that I don't like, then I'll get out. So yeah, EMAs are great. EMAs, VWAP, trend lines, support, resistance, supply, demand, nice basic stuff, because you don't need to know it all throughout the day. Every single move, for me, I identify the most important zones and areas and the amount of confluence, i.e. this resistance level, plus the resisting trend line level, plus potentially a round number of sorts, should we have held here, for example. So I'm happy to be wrong, but I'm definitely managing my expectations of getting them larger moves. If you're listening to people that can only scalp and only ever scalp, eventually they will come unstuck, because it's a case of a small risk to reward strategy, if you like. They have to be right multiple times. I only need 1 or 2 good trades a month, and that's my month done, but I'm only prepared to lose maybe a 1 to 5. So this trade here, this would have probably been a 1 to 4, a 1 to 3. So you cannot neglect them larger moves. These £100-200 are great, but even on a smaller, you're seeing guys now with quite large accounts, and they're only trading small 200-300 quid, 200-300 quid, which for me, over the period of time we've been working, we should be getting a little bit more than that now.